Dear viewers, you would have noticed that in the last few months, the Indian rupee is coming down against the dollar. Dollar is getting strengthened day after day. The rupee, which used to be at the level of about 75 rupees per dollar for last 4 years, has given up the level of 75, and as we record this episode, it is at the range of about 78 rupees per dollar. The dilemma that is there in the minds of the investors is, what should I do with my dollars now? In this episode, I am going to discuss about all aspects of this dilemma and try to find an answer what you should do with your dollars in the present circumstances. This is NRI Money Clinic for you, and I am Dr. Chandrakant Bhatt, investment consultant and a financial planner.
NRI Money Clinic. No hype, just the right advice.
For a long period of time, investors had literally forgotten about the dollar-rupee equation. For last many years, almost since 2018, rupee to dollar equation was in the range of 75 rupees per dollar. It was moving in the range of 72 to 75. That's where it was there from 2018. Suddenly, starting this year, the weakness in rupee is noticed, and slowly but steadily rupee is drifting down. Rupee is not collapsing against the dollar, but rupee is drifting against the dollar, and dollar is becoming more expensive as days pass by. This is the story of Indian rupee against the dollar. The crucial question is it just that the Indian rupee is which is getting weakened against the dollar, or what is happening to the other currencies? The weakness of every currency against dollar is perceptible today. You take it GBP, you take euro, you take yen, or you take any currency. Against all these currencies, the dollar is gaining ground. The reason for this upsurge in dollar is because of rising interest rate in the United States. The dollars which were circulating all around the globe are coming back to their mother country US, as a result of which the demand for dollar has increased and the dollar is rising against each and every currency. As we record this particular program, the dollar index is standing at a level of 105. That means it is just not a gain against one single currency, it is gaining against almost each and every other currency. So 105 is something of a lifetime highs for the dollar index for a long period of time that we have seen now. This drift in rupee against the dollar gives a doubt in the minds of investors. What should I do with my dollars? NRIs are sitting with dollars, they earn in dollars, and they normally remit it back to India. Rupee is drifting down. What should I do with this dollars now? Should I sit on dollars? Should I latch on to dollars here? Should I not convert into Indian rupees, or should I convert this into Indian rupees now, or at what point of time, is the dilemma that exists in every NRI's mind. Let's try to find an answer for this particular problem now. If your needs are in dollars, let's say that you are working outside of India, you are earning in dollars, you have commitments in dollars. Let's say that you are servicing a bank loan for which the EMIs have to be paid in dollars. Don't get into this arguments of rupee, dollar, rupee, yen, rupee, euro. Maintain that in dollars and keep servicing your liabilities in the dollars. But what if your intention is to remit these dollars back home to India after some time? Should you do that thing now, or should you do that after a period of some time? Is it better for you to hold on to dollars permanently here now, avoiding this conversion of dollars into Indian rupees, or it is beneficial for you to convert to Indian rupees now? Let's dig a little bit more into this and find an answer for this problem. If your intention is to transfer the money you have earned outside of India in the form of dollars back into India, in my personal opinion, it is beneficial for you to transfer those dollars to India and convert them into rupee at this present point of time. What I mean is, present point of time is not that you have to go to an exchange tomorrow morning and transfer it, but your opportunity is from now till the next 6 months, whatever you want to transfer your dollars to India, you should convert that into rupees now. This is probably the best possible time for you to convert this into Indian rupees. Why do I say it is the best time to convert this from dollar to rupees? To know that, let's look at point by point the reason which are working in favor of converting dollars to rupees. Reason number one, there is this concept of called reversion to mean. What it means is the currencies will move in both directions. It is not that it is just that the rupee will depreciate and keep on continuously depreciating. No. A point will come wherein which rupee, instead of depreciating, rupee will also appreciate. See, when rupee came down to 75 level, it did not stay at 75. It moved back to 72. So there is always an oscillation in the direction of the rupee. Sometimes it devalues, sometimes it moves up. Why it happens? It happens because of currency movement between the countries. At the moment, there is a tsunami of currency movement which is happening between India and rest of the world back into the US. The US Fed is increasing rates. It has made known its intention to increase rates many times during this particular year. So the opportunity for the dollars are improving in the United States dollars, as a result of which the dollars are heading home. So it's a tsunami of currency moving towards the US. Now this is making the rupee drift. But is it a permanent tsunami? Will it stay there permanently? Will it reverse? The answer to that question is it will not permanently stay there. It's obvious that a point will come where this tsunami of currency movement will get reversed. When that reversal happens, rupee, instead of staying at 78 or 80 rupees, will start appreciating. So today the currency movement towards rupee is favorable for an NRI. It makes sense for you to convert your dollars into Indian rupees within next 6 months. That is when the highest movement of rupee against the dollar towards the weakness will be noticed. Beyond that point, the chances are that the rupee could appreciate against the dollar. So if you are waiting for a proper time to convert it into Indian rupees, the next 6 months is the best time for you. I talked about reversion to mean in the rupees slide against the dollar. It will move down, it will move up. Is it the first time that we are going to see this? The answer is no. It always keeps happening. See, in the year 2000, believe me or not, rupee to dollar equation was at 45 rupees. At 45 rupees per dollar was the equation which was there in the year 2000. But in the next 10 years, in the year 2010, rupee to dollar was still at 45 rupees. For 10 long years, rupee maintained at 45. But if you take 2 points, 2000 and 2010, rupee is at 45. But if you look at what happened in between, that tells you a different story. After 2004, rupee started appreciating against the dollar. From 45 rupees a dollar, rupee climbed all the way up to 37 rupees. Yes, that's a massive appreciation of Indian rupee against the dollar has happened between 2000 and 2010. Likewise, between 2010 and 2018 rupee was at 75. In between, rupee moved from 45 to 68. A massive downside happened. That's because of various factors. We have discussed this in other videos as well. But when it reached 68, it did not stay there at 68. From 68, rupee climbed all the way back to 62 rupees. So the rupee is just not the question that it will slide down, it will also appreciate against the dollar. So if you are a person who is looking to get more rupees by selling dollars, your opportunity is now. Reason number 2, why I say the rupee is likely to appreciate against the dollar. India is sitting on a huge forex kitty. The forex kitty that India is sitting on today is in excess of $600 billion. That's not a small amount of money. $1 billion is 7,000 crores. 7,000 into 600 is the figure you should look at it. So India is sitting on a huge forex kitty. When you have so much of a forex kitty, it is extremely unlikely that the rupee will go for a collapse. A drift in rupee is something which is different from a collapse of a rupee. If you look at the Russian ruble, or if you look at the Sri Lankan rupee or a Pakistani rupee, these currencies have gone for a collapse. Collapse is a drastic fall in rupee. A slow drift is something which happens because of demand and supply of rupee, which is happening because of the market forces. So there is very unlikely chance that the rupee will collapse. So you should not be waiting. The chances of rupee appreciating from here onwards, maybe rupee will from 78 move towards 80, but rupee touching 85, 90, these things will not happen for sure. So that being the case, make best use of this situation, take the cues from the India's forex kitty, and it is better to convert your dollars into the Indian rupees. What is the third reason which makes me believe that the rupee will appreciate at a future point of time, which is not in distant future, in the near future it will appreciate? Indian central bank will also increase rate to defend the rupee. Why does the dollars leave India? It's because the interest rates in US is more beneficial for it. On the contrary, if the Indian central bank increases the rate and makes investing of dollars into Indian rupees more attractive, then the reverse movement of rupees to dollars will get slowed down. You have already seen during this year, RBI has already increased the rates by 2 times, and it is going to increase it many times during this particular financial year. So when the US increases its rates, the Reserve Bank of India will also increase the rate, and this can become a hurdle for the dollars to move back to US. So the investments in India will still look attractive in the fixed income space. So all the dollars will not go back to US. What is my other argument in favor of rupee? In the long term, an equation between two different currencies is dictated by the inflation difference that exists between those two countries. In this case, inflation in US and inflation in India. If inflation in India is higher, Indian rupee is likely to depreciate. If inflation in US is higher than that of India, then the US dollar has to depreciate against the Indian rupee. Where do we stand with this respect now? The latest figures, if they are to be believed, US has an inflation of 8.6% on the ground. Inflation in India, going by the current statistics that are available to us, is somewhere between 6 to 7%. All in all to say, inflation differential between US and India is imperceptible today. From an inflation point of view, both currencies are at parity now. So there is no specific ground for the rupee to depreciate because of inflation. So in a very short span of time, maybe 6 months, maybe within 1 year, rupee might start moving upwards against the dollar. Now that I have argued what are the points which are in favor of rupee getting strengthened against the dollar in the next 1 year, now let us try to find out what should you do with your rupees when you convert them from dollar to rupees. You convert into rupees. After that, what? You have two options in front of you. One, invest these rupees in the bank FDs or in the fixed income, or invest this money in the stock markets or related instrument, be it mutual funds or any other or direct stocks or in a PMS account or any of these things. What should you do? Now, if you are a person who has an intention to convert the dollars into Indian rupees and then invest in the fixed income, then my suggestion for you is do not invest this fixed income investments in a long-term contracts. What I mean to say is, if you are converting into an FD, do a short-term FD, whatever the shortest tenure that is available for you, maybe 6 months, maybe 1 year or whatever it is. Don't go for 5 years, 10 years booking the FDs now. Why I am telling this is, India is going through an upcycle in interest rate at the moment. We are just in the beginning of this interest rate upcycle. There is more to cover on this interest rate cycle. Probably another 1.5 to 2% upcycle is possible depending on what's happening on the inflation now. If you get into a long-term contract of FDs now, you will miss out on this upcycle of interest rate cycle. So the best thing for you to do is convert your dollars into Indian rupees, book them as 1 year FDs or 6 months FDs or whatever the shortest tenure which is available for you, and as times pass by and as your FDs mature, move them into longer term FDs when the interest rates peak, maybe another 1.5 to 2% above the current rate. The best opportunity for you to invest these rupees at this point of time, if you are converting them from dollar to Indian rupees, is to invest in the stock markets. If you invest in the stock markets, you are having an opportunity of unbelievable rate of returns that you might get within next 2 to 3 years. Now when the currency is down, the stock market is also down. Indian Sensex was at peak of 62,000 a few months before. Today we are seeing at 52,000, and there is more downside which will come in the stock markets in the months ahead. Probably it is fair to expect the Indian stock markets might bottom out somewhere around 48,000 on the Sensex to 52,000 on the Sensex. We are almost at 52,000. It is giving some resistance to break 52,000 on the Sensex now, but in all likelihood in the coming months the Sensex will give up 52,000 and head towards 48,000. Now if you are converting your dollars to rupees, you are going to get a good amount of rupees against the dollars that you are holding because of the rupee depreciation. You invest this in the stock market, you are buying the units or the stocks at the lowest possible prices. That means you are buying cheaper, you are selling a costly dollar. So you are getting more rupees and you are buying the stocks or the mutual funds at the lower valuations. What happens after some time? Maybe 6 months, maybe 1 year, maybe 2 years, market cannot remain down there permanently. Markets have to move up because there is an economic growth which is happening. Things will change. Too good or too bad periods will not remain. Once the stock market starts moving up, two things will happen simultaneously. It's just not the stock market which will be moving up. The currency will also move up. The rupee, which is at 78 or maybe heading towards 80, will start moving upwards when the stock markets will start moving up. The dollars which have left India, the FIs will come and pour money into India, which will make Indian rupee strengthen up further. Even if you have an intention to move this money out of India, probably converting your dollars to rupee, investing in the Indian stock market and taking these dollars out a couple of years down the line will help you get more dollars than the number of dollars that you are having today. When the stock markets move up, it will not move up in 1%, 2%, 5%, 10%. The initial up move in the stock markets will be 10 to 20%. That's the kind of movement the stock market is going to give you. Imagine you getting 20, 25, 30% up move on the stock market and the currency moving up maybe another 3, 4, 5% from here. You are up for a massive opportunity at this point of time by converting your dollars into Indian rupees and pouring that money into the Indian stock market. That's where the real opportunity lies. Dear viewers, if you need help to invest in the Indian mutual funds or Indian stock markets, you can make best use of our services as well. I have shown my number here on the screen. If you have an intention to make best use of the Indian stock market by taking services from us, you can reach to us through a WhatsApp message on the number that is shown here on the screen, and one of the financial planners who is working in our team will help you to build a robust mutual fund portfolio to gain handsome return in the years ahead. So do not delay, send your messages now. Dear viewers, hope the video that I have done today helped you to understand what's happening between the Indian rupee and the dollar and what is the possible outcome of this movement and where the rupee might head to in the coming months and in the coming years. If it helped you to understand this equation and helped you to take a decision in where you should invest now, please like this video. If you are a person who is watching this channel for the first time or if you are yet to subscribe for this channel, please hit the subscribe button and press the bell icon. Don't forget to share this video with your near and dear ones. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you with yet another topic in yet another video very soon.
Press the bell icon for more details and subscribe our channel.